All right, welcome to another episode of the Aspiring VC. Your host here, Matt Snow with Mass Ventures. I have with me today Tim McLoughlin from Cofounders Capital. But before getting to anything too serious, Tim, let's decide Dunkin' or Starbucks. What's your preferred coffee?
I got to go with dunks right off the bat. I was spent 8 years in Boston, and so I couldn't walk about 20 feet without seeing a Dunkin' Donuts and stopping in. So when I see them in other parts of the country, that's where I'm going.
Well, that's usually my first test of a person, and you have passed. So
All right,
thank
good,
you.
good.
But let's just do a summary about yourself and co-founders and how you got into this role.
Sure, I'll take you back a little bit. So my background, I grew up in North Carolina, which is where our fund is now. Played ice hockey down here, and so for you Massachusetts guys, Massachusetts has a little bit stronger hockey than us North Carolinians. At least it did when I was playing. So I actually went up to boarding school up in Boston. I then went to Harvard, played a little hockey. Wasn't as good as some of the other guys on the team there, but wound up leaving and opening a hockey training company. So my background was I had a services hockey training business, and scaled that out. Had programs running across the country. Good services business, but services heavy. Went back to, so that's still in business today. Sold it back to my business partner. Went back to business school at Keenan Flagler. Got heavily involved in the venture ecosystem. My partner now, David Gardner, had just started in 2015, Cofounders Capital, which was a seed stage venture fund focused on B2B software companies, primarily in North Carolina. There's a real lack of early stage funding here. And so I joined him a couple months after he raised that $12 million fund. And we've been doing it ever since. We've made 29 investments, seed stage stuff, all mostly B2B software. And so I'm a partner there now. That's a story.
That's awesome. And I will say, I think on Crunchbase and a couple other, sources, you guys are noted as the most active investor in the state. So, I know that you've got a wide presence and, some awesome portfolio companies as well.
COVID tried to slow us down a little bit, but apparently we were still the most active. So that's good. So I think they might take the most active over the last few years. So we still have that running, which is nice. And now over the next couple of years, maybe we'll be the most active exits. So hopefully we'll get that on the list too.
Yeah, that'd be awesome. So let's dive a little bit more into co-founders capital, the strategy, kind of what you guys kind of fill in the market, and kind of how it got set up.
So I just looked at this yesterday. We've invested out of the 29 companies we've invested in across the two portfolios, 17 of them were pre-revenue, right? And I think it was 12 of them were pre-product, really. And so we're really a venture capital firm on the earliest stages of the investments. Now, as our fund has gotten bigger and we're writing bigger checks, we have gone a little bit later in our more recent investments, but still open to those pre-revenue deals. The other thing that we don't shy away from is first-time founders. So that doesn't mean inexperienced founders. It just means maybe they're starting their company for the first time, and maybe we can jump in with our expertise that we have and give them the wisdom of a serially successful entrepreneur paired with the passion and the hunger that they have to make a winning team. Other differentiators, I'm very actively involved. I go on sales calls. I help raise next rounds of funding. I help recruit, interview management teams. All the stuff that active investors say they do, we're doing it.
And I know that you guys have some kind of maker studios and incubation that you guys host. Can you shed some light on that?
We have a free co-working space accelerator, which is actually sponsored to us by the town of Cary, which is where our office is located, as an economic development play for them. But it's free for all of our entrepreneurs to work out of. It's not a structured accelerator in terms of we don't have classes, and we do offer some lunch and learns and stuff like that. But what we really do is when they have questions, they can pop into our office, and well, actually, when we were in the office, and hopefully we'll be again soon. But they can just pop in and ask us. They can schedule some time to chat through their ideas, and we can give them very specific advice for where they're at in their business on any given day. Is kind of the idea.
And on that line, I think you guys probably provide this massively outsized amount of goodwill to the community, helping students, helping founders. How do you think about kind of the obligation of a firm to kind of give back, even when something's not a fit for an investment?
That's a great question. And we might have met through one of those student relationships a long time ago, right? So
Yeah,
um, it's a good question, and really what we want to be doing is building a brand and a reputation for the next 30, 40, 50, who knows how long years. I want to be doing this. I'm very passionate about what I do. I love what I do. I want to be doing it for several decades to come. And the entrepreneurs you're going to be working with 10 years from now might not look like the entrepreneurs like they do today. And so having strong relationships with the universities, talking to students that are interested in entrepreneurship is very important. Also talking to other founders that are currently in the market here that may be working on a project that isn't in our wheelhouse right now, but their next company might be, or their friends in their investor network might have companies that are getting started in our space. And so it's really just having those conversations, building a network. When the time's right, they'll come back, and if you were kind and showed some goodwill early on, you'll have follow-on conversations at some point.
definitely. And when you think back about what pushed you to like start your business, and then also when you were at UNC, like what pushed you to kind of get ingrained into the venture community, and how exactly was how did you meet David and how did you come into the firm?
Yeah. So when I thought about starting my business through summers when I was in boarding school and then college, I ran hockey programs for youth kids. I mean, that's what I love to do. I could train a little bit and be on the ice and hone my skills, but I could work with kids and meet great families kind of across the country, and I loved it. And so I thought, why not do this full time, make a living at it? And when I didn't go the traditional banking route that many of my roommates did, but in 2008 when I graduated, maybe that was a good thing for me.
Yeah,
Um, so I started my business, and I did what I loved, and I did it for a long time and helped a lot of kids and families, and so it was great. When I went back to UNC for business school, I just wanted to get into something a little more scalable, a little bit of a career change for me. And my goal there was to really learn more formally about entrepreneurship, and thought about becoming an entrepreneur when I was coming out. As part of that, I started learning about venture financing, getting to work, due diligence on all these different deals, work with a whole bunch of different companies. And so I was kind of looking for the opportunity of something at the intersection of entrepreneurship and investing. And what better way to do it than at Cofounders Capital? The way I met David was I was interning and working with several other venture funds and private foundations that are in the entrepreneurial space in North Carolina. So I had a decent network. As part of that network, across my email desk came a request from David, who was asking for help at Cofounders Capital, and the email read, "Shitty hours, little to no pay, but you might learn something." And so when I saw that, I said, "Hey, that's right up my alley." And so I jumped in. Dave was kind of looking for an intern, and I said, "Hey, I'm probably not going to be your intern, but maybe 5, 10 years from now, we can be partners." And we've been doing it ever since. And so it seems, for now, it seems to have worked out.
that's awesome. And like, for the listeners that are, maybe young professionals or, even still in college that are thinking about breaking into this space, like, what are some of the things that you would kind of emphasize for them to focus on in the passion, networking, and finding the right, experience as well?
Well, I think it's figuring out how you can provide value. I think that I talk to a lot of young professionals or folks that want to get into venture capital that want to pick my brain. They want to, how do I get in? How do I break through? Well, if you're providing value to people in the network, right, whether it's entrepreneurs, other VCs, access, maybe deal flow that of, potential investors that might be interested in working with, now you're providing value to those groups, and you're going to be kind of top of mind when any opportunities arise. And so just keep that in mind, right? What are you getting out of a conversation? What are you giving to a conversation? Is there a way outside of your normal day job that you can provide value to these groups and kind of build a resume, a portfolio of maybe not official job stuff that you're doing, but stuff on the side that you're heavily involved in? And I've seen some people that have done that with great success.
And when you think about, what draws you naturally to kind of, you talked about, you were interested in entrepreneurship, you're interested in finance, business, and this kind of naturally pulls into venture capital, which sits at the nexus. But, what are some of the other things, maybe why early stage and what pulls you into that?
Well, to me, there's nothing like moving the needle for a business, which can happen on any given day. So We get a term sheet across the table for one of our early companies for a couple $1,000,000. It just changed the lives of everybody, right? Their employees that have been working for, half quarter market salaries for a long time, the people that they can hire, the way they can accelerate the growth of their business. You close one deal, one big customer in a B2B software business, and that one customer could be transformational to the lives of so many people, and be such validation for how long they've been doing it. So the earlier the stage, I think, the more small events can really move the needle for the company, and I love being a part of that, and just being there from the beginning, right?
And I know that you guys have worked closely with Idea Fund and other kind of economic development initiatives. I know David's very passionate about one of these tax programs that is possible for certain category of startup investments. And obviously, Mass Ventures sits at the intersection of economic development and venture too. So we're kind of highly in this space too. But how do you guys kind of think about, promoting, the benefits of, growth in the state of North Carolina?
Yeah, well, I think first is building a track record. So I talk to a lot of entrepreneurs that are there that, or even when we're raising capital, some people point and they say, North Carolina needs to have the bigger returns, right? Some more huge successful exits, which can then, lead to more capital being invested in the state. And my response is, well, you got to plant the seeds first, and you got to plant the seeds 10 or 20 years before you're going to see those big opportunities. And that's what we're trying to do at Co-Founders, and my friends at Bull City and Idea Fund are doing the same things, which are, how do we plant the seeds at the earliest stages to have these big exits, these big opportunities, which is just going to trickle wealth back down into the entrepreneurial ecosystem. Other things we're trying to do is let's show job creation. Yeah, it's great, if we can get a company to move here, but what if we took all that money from all those companies where they didn't move here and we, offered hundreds of millions of dollars of tax incentives? And what if we invested that at the earliest stages? What could we do from a job creation standpoint? When you look at the hundreds of jobs that we've been able to create just from a small $12 million fund, and then our subsequent $31 million fund, what can you do if there was a couple $100 million in early stage investment into this ecosystem? And the other thing I'm trying to get people to change their mindset on, it's almost like there's either an investment or it's economic development, but for some reason it can't be both. And I think you probably at Mass Ventures understand this better than anybody else, but saying, hey, by the way, it can be economic development and you can make money on it. That's something that's possible. And maybe that there shouldn't be two separate budgets that people are fighting over which one is going to come out of.
Totally. Yeah. And we've seen with our grant programs, companies go on to raise incredible amounts of capital and massive amounts of full-time employee hires in the state. And it does speak volumes to kind of the way that, smart government programming can really lift up an innovation ecosystem. I was talking about this with another guest the other day. There's a lot of these intangible things that have to exist. You have to have academia. You have to have like this pipeline of great full-time potential employees. You need venture money, and ideally you want smart policy that's kind of promoting it, and putting some of this glue together. And you can't just come at it from one angle. You really have to have all these aspects. And I think, for you guys, I think it's probably the strength of that RTP ecosystem that really kind of lifts everything, right?
Yeah, and it's just such a collaborative environment. I mean, we all know the players and can pick up the phone at any time and call the other one. It's very collaborative, doesn't feel competitive at all. And even when some people say, your competitors, this other fund, I'm like, they're not our competitors. I'll be on the phone with them tomorrow offering to share a deal. I get emails from both of them today asking about talking about sharing a deal. So it's very collaborative.
Definitely. And along that line, like, what do you think about the impact that you want to have in the world and kind of in the ecosystem? And two parts, like what do you want to see founders doing, and what do you want the direct impact of your work to be?
Yeah, well, I think that when you have money and you're writing checks, you have some responsibility and power, I think, of what kind of change that you want to see implemented and what comes of it. And it's the same thing when we go to raise money, right? If we're going to raise money from an institutional investor that has some sort of mandates on where they want their funds being focused and their investments being focused, they have some power and authority and some responsibility too, and how they deploy that. So um, things that we're doing that we care about is how are we spending more time in underrepresented areas, like pockets of the state that aren't getting a lot of venture money? How are we seeing deals from there? how are we seeing deals from underrepresented founders that maybe don't have access to friends and family capital to get them to that, first stage where they'd be eligible. That was in quotes if people are listening, eligible for, venture financing, and how can we go down to the earliest stages of funding to make sure that those become real opportunities. And so that's kind of the change that we want to see. We want to see more capital going into early stage ideas, giving entrepreneurs opportunity to live out their dreams and build you know, their business and their careers and hire tons of people and you know, that's what we want to do.
Yeah, and I think when you talked about earlier how life changing it can be for some of these companies to get these follow-on rounds and exits, talked about this with another guest, but it is just so crazy to think about. First time founder that maybe they don't have a net worth that's already in 6 or 7 figures, and they can have this liquidity event, and then now if they have some wealth, they can go on to invest in companies, support organizations, and you think about the ripple effects of that throughout an ecosystem, especially if you start pulling up underrepresented communities. Once these people can have successful businesses that exit, I mean, they can just go on to support an entire next generation. So it all kind of like feeds off of itself.
Well, the majority of our investors in our fund, so our limited partners, are serially successful entrepreneurs and CEOs of some of the large corporations here locally. And so they're a living example of that, which is they had a big exit. They wanted to provide that opportunity um, to dozens of other young founders that have the same dream. And then by pooling resources in a venture fund like Co-Founders, we're giving, literally dozens of people that opportunity.
Yeah, it is amazing. I don't know the stats on the top of my head, but the amount of job creation and economic growth that is due to the venture industry, total outsized impact when you think of how much capital it is compared to some of these other, massive asset classes. Really transformative impact.
Yep.
Um, I think if you're ready, we can transition to some of these rapid fire questions.
All right, shoot.
First one is, who's been one of your most important mentors? And the caveat is, like, if you remember a specific piece of advice, maybe a quote, something that still stands in mind today.
Yeah, I think that I'm going to give a shout out back. This is kind of on repeat, but I thought about this one a lot. And you talked about the RTP, the Triangle community here in Raleigh, and just going to give a shout out for how accessible everyone was in that market, including we mentioned Bull City Venture Partners, Idea Fund Partners, our friends there. I interned at Idea Fund Partners when I was younger. They gave me a ton of knowledge and the ability to kind of kick off this whole venture career. Um, but just everyone in this community has really been a mentor, and it still is. People that have been doing it, I pick up the phone all the time and call them. How should I think about this? Have you experienced this before? So I know it's a little bit of a cop out, but I'm going to give a shout out back to the community here, and our other competitive funds, if that's what you want to call it. And then something I think that uh, I've learned through the time is it's always better to kind of bet on yourself and hard to get wealthy on salary. And so one of the things I think about is ownership, equity, long term betting on yourself kind of stuff. Um, and so that's what we try to just instill in our founders that are making these huge jumps from maybe big paying jobs into being founders and taking huge pay cuts and big equity stakes in these type of bets, um and even venture capitalists that are trying to raise their first, second, third fund and get this thing going.
That's awesome. I really like that answer. Outside of co-founders, who's one of your favorite VCs? Could be either a firm or a specific, general partner.
Yeah, I'm gonna give this one to my friend Monique from Mucker Capital. So I don't know if any of you know her, and maybe she hears this or maybe she doesn't, but she's great. She's a young female that's a rising star in the Southeast, and she does so much more than deal sourcing and investing. She really lifts up everybody she talks to every time she's in a room, and she works on DEI initiatives and equality, and it's a big passion for her, and it's inspiring. And I've had her on my podcast, and she's just great. And I think some of the younger VCs in the Southeast I've been able to collaborate. We're kind of coming up, through the ranks together, and it's just fun to see how other people, um, you know, do their jobs and do it really well.
That's awesome. Maybe I'll be able to get her on this pod sometime. We'll see. Um, who are, what's one of your favorite startups, or, what are the characteristics of a startup that start to get you really excited about a company?
Yeah. The So a couple things. One of my favorite startup stories. It's so cool. We had a company we invested in called Reward Stock, which they worked right next to me and us in our co-working space for 5 years. The founder, John Hayes, he was on Shark Tank, and so he got a deal done with Mark Cuban. So that whole story was cool. But the way he started Reward Stock was he basically figured out algorithms he could create to play off credit card benefits, bonuses, like number of miles they were giving you, stuff like that, and scheduled like a $45,000 honeymoon to the Maldives for like $200. And so it was like one of those stories that was like such a cool thing where he was able to figure it out for himself and then scale this opportunity into a business. And so he was passionate about it. It benefited a lot of people. They loved what they did. We worked alongside him. He got some stardom from going on and getting a deal done with Cuban, which there's so many cool behind the scenes stories we'll get into another
Yeah.
time. And then they had an exit, and it was life changing for his family, which was awesome. And it was just fun to be a part of that ride, and for our investors and everything. It was cool.
Yeah, that's an awesome story. Um, what are some of your favorite like podcasts, books, and blogs, both on like venture and I guess even just general, reading for you?
Yeah, I'm gonna give a little bit probably different answer than what you normally get, which is a specific podcast or book. But because listen to a lot and read a lot. But what I like to do is every day go through a lot of daily updates or newsletters that other funds are sending out, or the Base Daily, TechCrunch Daily, and just scan through that stuff. And actually, we take a lot of that information and just kind of track it on trends that are going on. Now, of course, you can get these subscriptions and insights and all this stuff, and that's fine too. But I just like to read in the moment of what's going on, what people are investing in, what they're looking at, and then newsletters from our other, collaborative investors across the Southeast. What deals are they looking at? Where are they making their bets? And really, what happens out of that is I can forward a couple things, I can shoot a couple emails off, and just keep conversations going with people in my network. Hey, I saw you invested in this. We have this other company. Maybe there's a collaboration opportunity. Should we introduce the CEOs? And so I'd say a lot of, I'd say, hour plus a day. It's just getting those daily updates and just searching through them for little tidbits that could be good networking opportunities.
Yeah, I think, compared to the past, I probably even more so every firm kind of has a media arm now, right? And so there's like all this content floating out there and, ability to kind of track what everyone's doing in real time. So the connectivity there is
It can be a little overwhelming, right? When you have 15 newsletters in your inbox in the morning, but the people that do it well, and highlight really what they're working on, and you can kind of scan through and pick out some meaningful stuff. I think that's it's good to follow that stuff.
definitely. One recent guest suggested that I add this, so opportunity for you to throw a question my way.
Oh man. Um, what's the have you heard any answers recently to any of the questions you asked on this that just completely took you back? Where it was like, hey, I didn't expect this to take that kind of turn.
Yeah, so the next question that I'm doing is this Tim Ferriss question about like, your favorite $100 purchase.
Yeah,
And I had someone say a bicycle recently, and it was just so different because I've had a lot of people say like AirPods and classic techie stuff that you'd expect.
yeah,
But he was just like, I really care about fitness, and it's a nice way to kind of like exercise and detach. So it was just cool because most people think of that question and they throw something goofy out, or I don't know, classic venture thing to talk about AirPods. But
yeah, yeah,
talking about the bike was like an interesting. It showed how much the focus on fitness really mattered.
yeah. Cool.
But yeah, I know, dovetailing into that one perfectly. Yeah, what is the $100 purchase that's had like its outsized impact of like happiness for you?
So interesting times. I'm sure you've heard already a couple times today, unprecedented times. So, what have people been up to for the last year plus? And a lot of it's watching TV and all this stuff. And I got two young kids. I got a 4-year-old and a almost 4-year-old and almost 8-month old. And one of the things that we did was I bought this like $150 smart TV. So I didn't even realize when I went to the store how inexpensive smart TVs are now, right? It's like a 50-inch, whatever. And it was $150. So I hope that still counts in the realm of the $100 kind of gift. But I found a spot to put it outside, and it was close enough to the internet, that I could stream some stuff. And so it's just changed kind of my perspective. If it's a nice day out, I can sit out there and stream something. I can bring the kids out and watch movies on a Friday night outside during a pandemic, which is just a nice little change of pace. And I don't know why, but it's been something that's created a lot of just extra happiness being outdoors, hanging with the kids in a different setting. It's been a lot of fun.
That's awesome. I think you got a very good price on that. So I'm a little low-key, a little jealous there. But
I don't know. I tell you the brand, but I doubt you've ever heard of it. But it still works. So, and it's lightweight, and so
yeah,
whatever.
yeah,
I've already gotten the value out of it. Let's say that.
yeah, totally. So final one here is just promoting yourself. So where can people find you on social media and everything?
Well, I'll give a plug real quick for a new podcast that I just launched. So us folks doing running podcasts, we need to help each other out. So it's called First Check Podcast. You can find it on Apple Podcast or Spotify. Again, it's First Check with venture capitalist Tim McLoughlin. And the idea is just to help people write their first check, whether it's into a venture capital fund, folks that want to be venture capitalists and invest, folks that want to be angel investors and want to get over the hump of writing that first check. It's just a little encouragement and some advice along the way. Also to entrepreneurs that are trying to raise their first check. So check it out. You can find it on my LinkedIn. I'm posting about it all the time, as you can imagine. You can find it on Spotify and Apple Podcast. Again, First Check. And then if you go to our Cofounders Capital website, my email's on there. You can get a hold of me very, very quickly.
Awesome. Well, yeah, excited to see the content that you're putting out, and for Cofounders Capital to continue to do an amazing job in the North Carolina ecosystem.
So I might have to throw one more question back at you if it's okay.
Yeah.
Can I double down on a question? All
Yeah.
right. So this is a question I ask on my podcast. So this is how I finish off the podcast. So I'm going to ask it to you right now. And I know you're not prepared for it, so this could be fun.
Okay.
All right. So Matt Snow has to invest a personal $100,000 check into one of 10 companies. Okay.
Mm-hmm.
You've never met with these companies before, and the 10 companies come and pitch you. You only get to ask the companies one question. You got to ask them all the same question, but you only get one, and you have to decide to write a check into one of the 10. What is the question that you ask the companies?
Why are you doing this? And if it's financial, they're out.
All right.
So I have to find the thought there is that the amount of stress and effort that it's going to take to be a founder is so much higher than the amount of stress and effort to just make money elsewhere, that if they're only in it for the money, they're not going to cut it. So they need to have this like life purpose that's aligned with what they're trying to do. And if they have that, and I have that good feeling when you get a pitch, then maybe that's the one.
Cool. That's a good answer.
Thanks, Tim.
Yep.
Well, this has been super fun. I really appreciate the time, and hope to collaborate again in the future.
Anytime. Thanks for having me.
Thanks, Tim.
Looking to innovate, invent, and disrupt? We're your partner to fuel your growth. Contact us to learn more.